Good afternoon. Good afternoon, everybody. I hope you can see the slides. Hope you can hear my voice if you're joining us for the live session, or if you're on the live stream. You're all very welcome. Welcome to Paul's Monday Market update number 218 for Monday, 16th of March, 2026. I hope you're all well. Hope you're all safe wherever you're in the world you're joining us from, and I hope you've had a good weekend and ready for what is going to be another eventful week in an eventful month in an eventful quarter in an eventful year. For those of you joining us for the first time, Paul's Monday Market Update is just that. It is me flying through as much as I can share with you over the next 25-30 minutes, looking at strength and weakness within the FX markets, looking at some charts of interest you might want to add to your watch list, and then having a look at the live markets. It is not a signal service, it's not trade recommendations, it's just me sharing with you what I'm looking at, which might be of relevance and interest to yourselves. As always, you are very welcome here, but just remember that you are always responsible for your own trading decisions. As always, if you want a little bit more help and support on your trading journey, there is the VTP Trader Accountability Group. Doesn't matter what you trade or how you trade, it's all about building discipline, accountability, and consistency in a small group. You can ping me for if you've got any points, or use that QR code there to take you to the page to join. On the flip side, next is basically a UK bank, NatWest Group. Okay, many of those in the UK, will know of them. You might even use them. Okay, you might be aware of them. Listen, I'm just going to zoom. As we can see that actually bank, that has been a great weekly trend. Okay, that has been a fabulous weekly trend. You hear me say it all the time. To those of you at the start of your journey, okay, or sort of looking at sort of longer term position trading or investing. Good trends don't happen anywhere near as often as we'd like. They may only happen 20 to 30% of the time. So when you're in a good trend, don't fight it. You find a way to ride it. Okay, and that has been a great run there. Okay, so for those of you watching who don't know, they are NatWest. They're kind of a UK sort of retail and commercial bank that are exposed to UK mortgages and domestic growth. So people might sort of say, well, what's going on in the kind of UK property market? What's going on in terms of UK economy growth? What has helped these guys is because they've been exposed to those to kind of UK mortgages, etc. Is that the higher the Bank of England has held rates, that has helped their profitability. All right. However, they're still influenced. They are still a bit of a reflection of kind of UK political and regulatory attention. So these guys are going to be sensitive to UK interest rate expectations now, and also kind of housing market sentiment. So, if we're not getting cuts and that and it looks like interest rates will hold higher for longer, that would help them. But equally, the housing market sentiment, and certainly from conversations just even with my own sort of acquaintances, there's nobody's got really anything terribly good to talk about the housing market at the moment. And so I see us here. We're at that kind of weekly 50, which acted as support of a sort, okay, back in April last year, but that was the kind of tariff tantrums. The question becomes, can that hold again? All right, you've got 600 pence there above it. All right, is that going to act as resistance? Are we going to bounce off here? I always look at a little bit of a scenario. Could we bounce off the 50, come up to sort of 600, hit the 20 period moving average, and if we got a rejection, that would for me would be a kind of a scenario of kind of much further lower moves and stuff. So as I said, one to add to your watch list and see, does the 50 hold as support, or is it just a bit of a dead cat bounce before it rolls and moves lower?